Welcome back. In our top business story, the UAE has attracted 76 billion US dollars in foreign direct investment since its foundation 40 years ago. That's according to the UN Conference on Trade and Development. FDIs into the UAE represent nearly 13% of the overall FDIs flowing into the Arab region, altogether 603 billion US dollars. Saudi Arabia came in at the number one spot with 170 billion US dollars, accounting for 28% of total Arab FDI, just before the UAE and Egypt as the number three with 73 billion US dollars. In terms of investment outflow, the UAE holds the top spot at 55.5 billion US dollars for the 40-year period, followed by Qatar with 26 billion. Dubai property firm Nakheel is looking to develop a 136,000 square kilometer mall at the tip of the Palm Jumeirah, valued at 300 million dirhams. According to a local paper, the mall, to be named The Point, will offer a number of food and beverage outlets and will focus on leisure facilities as well as feature fountains and provide access to a monorail and boat rides that connect it to the Atlantis Hotel. The chairman of Nakheel, Ali Rashid Lota, stated that the new development aims to bring in a number of tourists and residents alike, and that they are currently in talks with banks for financing. The project is set to be delivered by the end of 2013. Etihad Airways was again named the world's leading airline, a title the airline received the third year in a row. The judges at last night's World Travel Awards in Doha also presented Abu Dhabi's carrier with a World's Leading First Class and a World's Leading Airline to the Middle East award. For Etihad, these three honors cap a busy year when it launched 7 new international routes and purchased a 29% stake in German low-cost carrier Air Berlin, a deal that enables access to 33 million new passengers in Europe. 2011 was also all about boosting profitability, CEO James Hogan said, as the airline began to reap the full benefits of its financial and operational strategies developed over the last 5 years. Drydocks World will build a wind power offshore platform structure for energy service company Able. Drydocks World today announced that it has entered into a contract with a Norwegian firm to build an offshore wind farm and that the project will be built in Germany's North Sea. The wind farm is expected to be delivered by 2013.
The project, of course, is multiple phases. It has the latest technology we know in the wind turbine and especially the generation side and the collection side, and will also have an important aspect with regard to how this is going to be saving a lot of saving the environment and also contributing overall to the German generation and German electricity grid.
And let's now look at the stock indices across the GCC. Today, the European Central Bank will meet to decide on whether to lower rates further and could discuss further bond buying. We have Bruce Powers, Head of Research at Trust Securities, here with us to talk about the issue further. Welcome, Bruce.
Hi, Lena.
We heard that rates will be kept on hold at 1%, but what do you think is the floor this year for ECB rates?
Well, you know, there's a lot of economists that think 1% is a floor. But we have the Bank of England has its benchmark rate at 0.5%, and the U.S. is at 0.25%. So I don't think it's unreasonable to think that the floor may be below 1%. A lot of it, of course, is going to depend on what happens with the outlook for the economy. We're getting some mixed signals in Europe right now. We have some positive news out of Germany and France, and we're getting some weaker signs of an economy in Italy and Spain. So investors will be watching very closely the comments by the European Central Bank today to get some feeling for what their outlook is.
What's your expectations on the ECB's bond buying program to ease the pressure on periphery countries like Greece and Italy? Further bond purchases to come?
Right. Well, I think they will have to. They need to support the weaker countries by buying bonds to keep the yields lower to help them out. We have a slowing economy. That is certainly not going to be good for those countries. It also puts higher pressure on the investors to ask for higher interest rates. So, you have two negative for those countries. You also have pressure on the stronger countries like France and Germany because they have to help out the situation, and it is pulling on their economy. So I think there will be more bond buying coming up.